Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This week on the Markets Club podcast with Scott Verilek from Kooima Evielk Trading for today and John Heinberger from Total Farm Marketing. The feeder cattle for right now. It's bigger than some concerns or do not. Perhaps the cattle markets is getting ramped up because of the expansion. And what's concerns about the consumer budget? Doubt that the consumer is running for beef, but the job market is higher for last month and wager on the NWS. We were joining with Scott Verilek from Kooima Evielk Trading. Hey Scott, how are you in South Dakota?
Yeah, things are good. I was back at the ranch in South Dakota here this weekend, so cow country looks amazing, at least in the southern part of the state. A lot of rain, so feeling pretty blessed. We've got some big crops and haven't had a lot of pasture issues, but you can find some around. But no, things are looking pretty good.
Great to hear that about the rains. Okay, Scott. I was surprised to the feeder cattle for last week within 5 to 8 cents, higher than previously weeks. Otherwise, what is your thoughts on the cattle markets?
Yeah, it's been quite the ride. The ups and downs and the cattle prices has been mind blowing. And I think we're all, getting a little bit stressed with how fast it moves, how high it goes, but cash prices stay strong and just stay on. We've had two different instances of limit down days in the feeder cattle markets futures. We've been able to fight that off. I think it's the cash market that always holds on and bails this market out. And it still says, hey, yeah, there's still big demand going on for these feeders, and we still have tight numbers. So that's staying as a lead factor there and always pulling the futures back. So the wide ranges, they're hard to stomach. When you're at record high prices, things can move like this. So it's uh, trying to maintain as much safety as you can, but knowing that you've got a lot of risk out there. So, I mean, the amount of dollars that we have with cattle on feed, when we start to see a limit down day, you're pretty spooked. You're emotionally strapped and trying to figure out how to do that. That's what creates these markets to spin just as wild as they do right now.
What do you recommend within the premium risk for the producers?
Yeah, the risk for the producers is been the largest struggle we've had with this markets because margin calls are real. They happen, and we've had to expand notes if you're a straight hedger, and it's been grueling. So the amount of premium you're going to have to spend on an option is just going to have to be higher. We're protecting something that has a lot of room on the way down, and we're at a very high price. So just getting used to the fact that, yeah, I'm going to have to spend more on this option because, the cattle we're selling now, options are going off the board, floor levels at 177, and here we are at 237. Very large difference there. So the $60 it's rallied past that floor price. So now it's okay. Do I do that again? I'm not sure. It's going to cost you more, but we're protecting something that's a lot higher price. So getting used to those higher put prices. Yep. And if you're really shocked by that, and you try being a straight hedger, then you're surprised by how much margin calls you have. So uh, it's really been tough to try to safely try to stay in business, try to safely buy some cattle, just because everything does cost so much.
Yeah, it does take advantage with the grains markets, especially with corn is cheaper than buying in the grains markets.
Yeah, the feed issue. I mean, everybody has a lot of feed, and that's why the price is getting lower, and that adds to the fuel that is the feeder market. I mean, we saw that on a Tuesday where a grain report comes out at 11 o'clock, and you get a bearish corn number, corn's heading lower, and you get boxes shooting up. There go the feeders, back to higher. So there's a lot of feed in cow-calf country, and we've had a lot of rain, so a lot more feed, and so that interest will want to try to feed cattle is still there, and that's just adding to the fire. Because if you don't buy something to feed, what are you going to do? What are you going to do with all of that feed that you have? I mean, corn, you can just move it, but at a much lower price than you like. So the cheaper feed and continuing to get cheaper, that's still playing a factor here as well.
Of course. How is the fundamentals on the cattle markets for right now, Scott?
We're in some tighter numbers. It's been a lot of supply talk. So that's been getting the highlight. And I think with that moisture that's around, we're seeing some heifer retention. It is happening. Seeing the shift of more steers on feed and less heifers on feed. So the last report was 95% heifers versus 101% steers. So seeing that shift. You have a strapped cow herd that needs to rebuild, so trying to is what we're doing. We're seeing cow slaughter numbers really drop this year, so they're able to keep some more back. They have feed, seeing some heifers bred. There's going to be a lot of interest in selling bred heifers and really cashing in. I think the thing that makes me nervous is just, okay, who's going to calve these things out? That's what's got us into this corner is just less ranchers around, and there wasn't enough making money making it down. Well, now there's some pretty big carrots dangling, but just the cost of getting in is just is so hard. So we're feeling like we're going to be tight numbers for a while. It's not just going to recover overnight. So then you're going to have to shift over to the demand and kind of decide, is that going to hold on as strong as it is? But from the supply side, I think we're still at tight numbers, and we've got more tight numbers coming yet ahead.
Scott, we were bringing it up with the consumer budget with the job markets. Do you have any concerns about the economy in general?
As of now, I feel pretty good. Demand has been one thing we've been able to really rely on and has been just true blue strong up and down the road here for the beef industry. And for me, it still feels like we're doing all right. Things are high. Maybe it's a little sticker shock, but the price of everything else is higher. You do your drive-through coffee. We all have 3 and 4 and 5 TV subscriptions. We are a spending economy, and for what we're getting in a beef product, I think it's absolutely worth it. And the good thing that we have happening right now for beef demand is the consumer really wants high quality beef. There's a lot of good nutritional data out there. How good that beef is for you in your diet. So we're kind of on the upside of the news for the consumer, and they do want that beef in their diet. So I think there's always a little concern because we are getting higher. The boxed beef has surged back higher real fast. We're not even anywhere near the record highs that we had in 2020 for beef. So still some limits to be tested there yet, but beef's a good product. It's standing on its own. Producers weren't getting enough profits, in for years in the industry. Finally, they are. The pendulum has shifted to where now the packers and the retailers are struggling. So pendulum will move back and forth, but I still think beef can afford to move ahead in prices, and we'll kind of find that happy spot. But have not seen enough sticker shock out there yet because packers are still driving around looking for cattle, need the cattle, want the cattle. Even with red ink, they're having a hard time trying to keep up. So I think that just stands to say, hey, this consumer still wants beef, and I feel real good about it.
How about the meat case with the consumer budget with the holidays are coming up? It's here, you know it.
We've got some Labor Day buying happening right now. I mean, that's why we're getting the surge in the boxes and nice little surge in the cash price for the live cattle. And, we kind of get through these dog days of summer and then we always get to look forward to that little Labor Day run. And it usually, comes pretty good. We get it second week of August seasonally is when we can get those pushers in the boxes and the cash. But as we get to the end of the August, that's when it does get a little bit more sluggish, I guess I would say. But even in the slow times of the year, it feels like beef demand is held on. So I'm looking forward to another holiday weekend and think that we'll perform have some good performance, I guess, as far as what a consumer is looking for. And still think even after that, hey, we're feeling okay.
Finally, how is the weather forecast for next few weeks ahead in Northwest Iowa and South Dakota?
It's been an amazing amount of rain all the way up until now. I'm Northwest Iowa here getting, it felt like it rained every other day, and I am not exaggerating. It was just steady on. I mean, it's been green all year and growing. We're looking at record yields. It's going to happen here for sure, even with some of the storms that we had. So, feeling good about it. There is some extra heat that is coming in the forecast. I don't think we're very alarmed by it. We haven't been overrun by heat. We haven't been to 100 degrees, and it has been cooling down at nights. I mean, that's a big part of it. When it stays hot all night long, that's when you can start to see damage on cattle and crops. That can be hard to get over, but we've really been cooling down at night. So I think a little bit of heat would probably be okay. I almost think we'd want to sign up for it because we wouldn't hurt if we dried out just a little bit because I think the harvesting conditions would just be a little bit better here, just as wet as we are.
Where people can find you for your consulting services for their livestock planning.
You can find us on our website, KKV Trade.
The crop tour is underway in the Midwest and central Illinois. However, there is a big record yield, or not in the corn and beans. Well, we will get a few days to go with the farm progress show indicator meantime that farmers are watching for the markets. Now I'm talking with John Heinberg from Total Farm Marketing. Hey, John, how are things in Wisconsin?
Things are doing well. A little wet after last week's rains, especially here in the eastern part of the state. We had some pretty good flooding. If you didn't see the news, Milwaukee area picked up over 10 plus inches of rain. Not a lot of room for water to flow in a city like that. We had over 8.5 inches of rain here Saturday night, Saturday. So things are a little wet right now, so we could lose a little bit of drying out here, especially across the core center of Wisconsin into the southeastern corner.
Don't talk about the Brewers.
Hey, we won 12 in a row as of yesterday. So I believe we're 27-4 in our last 31 games. So we'll see how this finishes out, but they are fun to watch. In fact, I'm going to the game a week from Monday. But best part right now, with 12 wins, George Webb West restaurants here in Wisconsin got free burgers for everybody. We just got to find out the details.
John, we were talking about the commodities markets, especially in the corn markets, especially with these private crop tour in the Midwest and the weather. Otherwise, I know that you do not agree with these yields on these crop tours, but do you have any thoughts about data based from the USDA?
Well, let's put it all together. I'm mixed on how crop tours come out in terms of yield. Okay, those are individual snapshots in certain places and fields, and that they hit a field that's got in a really good spot, it's going to reflect. If it's a poor spot, it's going to really reflect. It's just a minor sampling, a needle in the haystack per se sampling, but it gives us at least an idea what's out there. I don't think it's any different than when an individual producer goes out there and posts things. The internet likes it, news media likes it, social media likes it, just because they can all jump up and down saying this is the way it is. Uh, we'll find out when combines get on the road. That's the biggest thing overall. Obviously, we got the USDA numbers this week. Monster yield at 188.8. A lot in the marketplace didn't think that was coming. Most people thought maybe a couple bushels up, that type of thing. You go look at some history here, and I talked about this with my team. This is the best crop rated since 2016. 2016 saw a 4.5% jump over trend on its first number. Well, you put 4.5% on 181, guess what? It's 188. So they kind of stayed true to some methodology. Obviously, is that probably going to be the final yield number? Probably not. I mean, obviously, weather comes to point, but we're starting to hear that disease pressure, and we've seen some of the pollination issues, and so in my mind, I think the market's probably not even trading that number. I think it might be closer to an 84, 85, at least what the market's thinking right now. But the biggest thing is right now, we have just got a pile of corn coming here. And that's going to be the biggest weight on the market. Not so much that carryout number, because that carryout number comes all the way back to, that's supposed to be where we are next August. And a lot of things can change. In that we saw it last year. Last year we started at 2.2. We ended at 1.3. Okay, so it was a big move in terms of carryout during the course of the year. The only thing right now that's really focused in my mind, and traders and market participants and producers need to keep on the mind, even if that crop comes down off that yield, we're looking at pushing 16 to 17 billion bushels of corn coming at us here. We've got 1.3 billion bushels of carry in from last year. So that keeps that, like I said, about 17 billion bushels of corn here. To this morning, Brazil and CONAB raised their corn crop up another 200 million bushels. So there's another 1.5 million bushels of corn. So right now, the world in the next handful of months is trying to find a place or a home and digest, over 18 billion bushels of corn. And that's going to be probably one of the biggest things that's going to weigh on the marketplace. It's just the fact that we have a supply bear market right now.
Are there any concerns about the weather markets for right now, John?
Realistically, the corn side of it, weather markets are out the window now. We're at the stage where this crop is going to get put together. Obviously, if we dry down, that's going to lower the crop a little bit more. If things stay dry, we're hearing talk of that in the eastern side of the Corn Belt right now. If we stay wet and comfortable, it does bring potential more disease concerns, things of that nature in there. But really, in terms of the market's thoughts, weather premium in the corn market's been pretty much eliminated. And really won't have anything unless we see like a flash drought situation where we're hot and dry, like we saw last year, and then the crop really probably lost some top end majorly. On the soybean side, obviously, we're still in that key window here. We're filling pods. You saw that in the crop ratings. Bean plants look very good, 68% good to excellent. We need to watch this weather here. Obviously, west of the Mississippi, northern Corn Belt, and things of that nature got the rains. They're in pretty good shape. Eastern Corn Belt might be a bit of an issue. We'll have to continue to watch the patterns there. Temperatures are above normal right now, but really this time frame of the year, normal 75 degrees. Last year, the average temperature in the Corn Belt in the Midwest through the month of August was 75 degrees. So for 2-3 degrees above normal, that really isn't a stressor on the crop. So we'll have to see how it plays out, but there's still a little room for some weather premium in beans, especially with these tighter numbers now. But at this time frame, again, most of that's been moved to the sidelines as we still just kind of watch how this crop finishes out.
How about the technical side in the beans markets for November beans?
Technical picture, obviously, we had a pretty good breakout here. With the report, we did run to some pretty strong resistance up around the 1050 area today. Fell apart though today. Right now, trading towards the end of the day here, 13, 14, 15 cents lower. Again, we saw the Brazilian farmers step in and start selling this week with that bump in prices. Don't forget, they still have a record supply of beans down there. In regard to that, Today's close could be very, very key. We are putting some potential reversals on the charts today. Tomorrow will be a very important day in that regard. I got a number around this 10:30 window November. If we can't hold that area, that actually turns us into a false breakout and would put us back into a sell mode with the bottom of the range again being back to that 980 area that we just left here a few days ago. So maybe this B market's going to get two-sided right now. We'll have to see and just kind of work this trading range, 1040 on the top, maybe 10 holds us on the bottom with the tighter numbers. So we'll have to see. But right now, still until we get proven further in the near term because of the supplies coming at us, rallies are probably still meant to be sold.
Do you have any final thoughts about the beans markets for right now with the fundamentals from the report?
There's a lot of different what if scenarios because of the numbers that got put out there, the reduced acres, things of that nature. Now we're going to be focusing on South American weather pretty soon for getting that new 120 million acre bean crop planted for next year, which, if realized and weather's good, could be up to near 180 million metric tons. USDA is forecasting 179 for next year. That's a massive bean crop compared to even this year. So we'll be watching weather, but I've had conversations with producers today. They're going to hold beans out to May, maybe move some HTAs out to May, collect that premium in the market. But then we want to own some out of the money calls because after we get through this pile of beans and get things kind of squared away, if the demand does stay strong on it, we could really see this carryout number tighten up, and we could see beans really kick in this summer. So we want to make sure we got some paper over top. That's one of the strategies I'm talking about with producers now, owning some bull call spreads out into May, out into July, just have some upside paper in just in case the demand stays good. And let's say that South American crop has to deal with its weather issues now. It's almost like U.S. weather is secondary in the soybean market to Brazil weather when it comes to their bean crop.
Do you have any concerns about these prices in the grains markets for next few months?
I still think corn market's going to get pretty flat. I think with the supply that we're going to have to deal with from now to the end of the year, what's our range? 430, 380 is something I'm kind of looking at my brain right now, where we get down to the lower levels, producers stop selling, market needs corn, they bid it up, we rally, get to the top levels, then producers start selling, drive prices back down again. So this is very similar to what we saw and basically through 16, 17, and 18 with the big supply that we could be working through. And then we'll still have to see how the demand holds out. On the soybean side, that one, we got a lot more potential volatility because it doesn't take much to move a soybean balance sheet around. So that one could be just a little bit more volatile on prices. Like I said, if we see those carryout numbers come down, demand stays good or picks up, obviously is what we need to see here in beans. That could quickly swing this market back into the positive territory. But if that demand is not there, we could very quickly see prices fall apart again, possibly go back and retest some of those lows, if not even lower, if we don't see that Chinese business come to town.
Thanks, John.
Thank you very much, and have yourself a great day.
This is John Heinberg from Total Farm Marketing on the Markets Club podcast.